Pinterest lost money in its first quarterly report as a public company is not really a surprise, but the fact that Pinterest lost nearly 3 times as much money as expected may be why shares fell more than 10% on Friday, Jason.
Perhaps. I mean, I think given what we know today and that this is still a newly public company with a somewhat limited user base, you might see the narrative out there saying this is a bit of an overreaction from the market. I actually don't think it is. I think the reaction is pretty fair, and I do think that we will probably see things get worse before they get better. Now, with that said, I mean, the numbers were not bad. They were pretty good. Revenue was up 54% from a year ago. Monthly active users up 22%. Global active revenue per user was up 26%. The problem there is that the growth is starting to slow down. And, these guys were a little late to the game in going public, so that's understandable. But if you're a social network and your name isn't Facebook, you're dealing with somewhat of a limited user base. So then really it becomes more a story about what you do with the user base, right? And we're seeing cases where companies are doing a lot of productive things with their user base. And I think that with Pinterest, they do have a lot of potential in the retail implications because it is a platform that favors a bit more of a commerce style environment. An example there, companies can now upload their full catalogs to Pinterest so that people can, pin things and actually commit to buying things, which I think offers a new avenue of profitability for the company down the road. But if you look at full year expectations, they're planning to bring in a little bit more than $1 billion in revenue this year, still going to be unprofitable. And that ultimately prices the stock around 14, 15 times sales right now. We've seen this story play out before already. My suspicion is we see this stock fall probably below 10 times sales. And at that point, you reassess and see if they're making progress on the commerce side. And if they are, then it could represent, I think, a pretty good opportunity.
This is not the first time we've seen this, and it probably won't be the last, where a company comes out, they have an IPO, the stock pops. In the case of Pinterest, it was up close to 30% opening day, and then they issued their first quarterly report, and we see a scenario like this. We've got some big-name companies planning to go public later this year, Slack, Airbnb. What do we want to see from them? Because it kind of seems like, among other things, Andy, Pinterest could have done a better job of communicating what was coming.
Well, I think if you're an investor and now you own stock in Pinterest and you've owned it for a while, you have a pretty good, clear, especially if you're a big institutional investor, expectation of what you want that management team to deliver for a quarter, 2 quarters, maybe 3 quarters out. And you don't want to see any surprises. And I think if growth starts to slow or expectations come out a little weaker, that's a bad sign for those investors who previously have owned it as a private company and want to see nice gains in the public markets.
There's like this tug of war with the investment bankers, though, because the investment bankers are going out on a road show and wanting the company to put its best foot forward and, ixnay on the bad news day, kind of thing. But yet you still need to be transparent. You certainly can't do anything that would be considered fraud, but you still have a stock to sell.
Yeah, and I think for investors like us, not institutional investors, but just your retail investor looking to buy shares in these companies, it's really just about a clear path to profitability. I mean, all of these companies that are going public, great to see them out there, but they are unprofitable, and you got to have an idea of when they'll be able to turn that tide.